Business leaders and investors have already begun incorporating non-financial measures of company performance into decision-making procedures. Chief among these are the so-called environmental, social, and governance (ESG) indicators. The significance of the growing movement towards sustainable investing is perhaps best captured by a 2019 statement released by the Business Roundtable, a nonprofit organization whose members include executives of Amazon, Apple, and General Motors. In a statement signed by 181 CEOs, the group committed to redefine and redirect the purpose of their organizations from generating profit to creating value for all stakeholders, including customers, employees, suppliers, communities, and shareholders. If true, this would represent a significant shift from the corporate thinking that dominated the second half of the 20th century. It reflects not only changes in what investors say they value, but also changes in what firms are expected to provide as evidence of positive impact. In the coming years, the ability of firms to demonstrate social value, the S in ESG, is set to become an even more important driver of investment decisions. It is here that workplace well-being is likely to become an important indicator for social impact and, in turn, emerge as a potential pathway to superior firm performance. As we noted earlier in the book, after long discussions with the influential ratings company S&P Global, workplace well-being, measured according to satisfaction, purpose, happiness, and stress, is now included in its Corporate Sustainability Assessment, CSA, which surveys most of the world's major public firms and ultimately feeds into their ESG scores. There is indeed now a whole section in the CSA on trends in well-being, where companies are asked to report on employee well-being. Having a workforce with high levels of well-being is thus likely to become a key aspect of a firm's reputation that will help it to raise capital. One particularly interesting prospect in years to come will be to cross-check the inside-out data that companies report to S&P Global with the outside-in data crowdsourced through the Indeed platform. As more information on organizational well-being becomes available to investors and consumers, a fundamental issue will likely be to ensure that companies prioritize and support their employees' well-being. Companies that fail to do so may face the increased scrutiny of investors and lenders, and thus have a greater cost of capital or less access to it in the future.